And this is what's happening now. Okay, this is a good segue to this topic. Who is the largest debt holder of ours around the globe? China. You guys remember about a week ago, Mr. Biden, our current president, put sanctions on China, right? On EVs, solar panels, and all that good stuff. That's why U.S. solar companies went up. And one of my stocks that I was talking to you about last week was First Solar, Enphase, all these things, which I'm going to go through. So what is China doing? See, we can put a gun to their head by saying, okay, we're going to put tariffs on you. We're not going to buy shit from you, right? So your economy is going to tank because Chinese economy is based on what? On exporting shit to us. And our economy is based on what? On buying shit that China produces. That's where we are. We used to be a manufacturing economy. No. Now we're a service economy where 75% of our GDP is consumer spending, right? Well, what did China do? They have every year, they have $500-600 billion trade surplus, and we have a trade deficit, meaning whatever we're selling them minus what they're selling us, they're gaining $600 billion a year. Okay. So what do they do with that 600 billion? They come buy US Treasury bonds. Who owns whose ass now? Okay. So, but now China goes, you know what? That dollars that I'm holding intentionally is being devalued by the US government because these treasuries go from 2 year, 5 year, 10 year, 30 year. By the time Chinese bonds that they own, our bonds, matures in 30 years, that piece of paper they're holding is not worth shit. So China figured, you know what? They have a bigger gun. We have a bigger gun on our head, on their head, on the US's head than they have on our head because their economy is global. They'll sell it. They sell garbage to all over the world. Okay, US is not gonna buy it. Yes, our economy is gonna get hurt, but we hold their future in our hands, right? So now, for the last 6 months, this is happening every single month now. China is selling the treasuries. What is that doing? That's adding pressure because all that sale, right, is going to put more upward pressure on interest rates, right? So what they're doing is they're just starting to liquidate the treasury holdings that they have. And last month they sold another 50 billion. They reduced their treasury holdings from 815 billion to 767 billion, right? And why? Because they believe that the fiat currency, US dollar, is garbage and they don't want to participate, right? And I don't blame them, honestly. I think they figured out the game. And that's why, again, everybody is so hot on Bitcoin. And if they keep doing this, if they keep reducing their treasury holdings, think about this. Remember that 34 trillion and our debt is going up by $1 trillion every 100 days, right? Who are we going to sell these bonds to? We're signing IOUs and handing it over all over the globe. Who's going to buy? If the Chinese don't buy, if the Germans don't buy, if the Japanese don't buy, who's going to buy? If who? So what happens in order to make these bonds attractive to the investor? Yes, in the US, there is trillions of dollars of this floating around in pension plans, 401ks, mutual funds, things like that. I get it. But if in order to make this more attractive, right, we cannot lower the interest rate on something. If they look at this IOA, I have it at 3%. They go, no, I want more interest because the value, the actual value of the bond that I'm holding, right? Dollar is losing due to inflationary pressures. Dollar is losing its value. So there is a nominal rate in this. Nominal rate meaning if I buy a bond today, okay, if I even forget the bond, this is too complicated. If I go to my credit union and get a 6-month CD, 1-year CD, right? It's going to pay me 5%, right? Am I really truly getting 5% though? Because our inflation, actual inflation, not the government told one, is running about 5, 6, 7%. So actually, I'm just about breaking even. So the buyer of all these hundreds of billions or trillions of bonds around the globe, they're going to say, wait a minute, you're inflating, you're debasing your currency. I'm losing value on the shit that I'm holding. You need to pay me more interest. So that's why the interest rates may stay high for longer than the Federal Reserve would like, right? So, this is all coming together now, right? The debt is coming together. Fiscal policy being completely upside down is coming together, while stocks are going parabolic or have been going up and up and up and up and up. Something is going to break. Okay, is this the start of the break? I don't know yet, but I told this before. I'm going to say it to finish these segments. The day the Federal Reserve starts cutting interest rates is going to be the top in the market. Trust me, because the only reason Federal Reserve lowers interest rates is when economy is slowing down. Since our GDP is based 75% on consumer spending, that's the day the market's going to sniff saying, oh, wait a minute, is the consumer getting weaker? Is that why they're lowering rates? Because Fed only lowers rates when they think the economy is slowing down. And that will be the top of the market for a while. Okay. And the people are going to say, yeah, but when they cut rates, market goes up. Nope. Market goes up 6 months ahead. It's always 6 to 8 months ahead. So never forget that. So, yeah, I'm going to say good on Chinese. They figured the game out. They go, yeah, we don't want your garbage bonds. We're losing money. By the time it comes to maturity, that bond that I bought for it, because every bond is $1,000, that bond is worth $500 by the time it comes to maturity and you pay me my IOU back. No thanks. Have a nice day. And again, we're playing with fire, people. That's all I can say. And a lot of people talk about it, but then it goes to deaf ears and people just go FOMO and get into markets. And I'm like, okay, well, when it ends, don't cry.